Hello everyone. What's going on? How are you doing today, guys? Can you hear me loud and clear? Okay, let's go. So, first of all, how are you doing today? How was your trading day so far? So, everyone who took a DR IDR setup today, give me a 7 in the chat if you made profit. Everyone, spam me a 7 in the chat. No 7? No 7s? Ah, there they're coming. Nice. I mean, to be honest, today, I don't know if there will be better days than today because, like, today, wherever you were looking from equity to Forex to Bitcoin to gold, like every single instrument gave you Baba setups. Really Baba setups. Okay, let's start. Shall we look on the setups we have seen today, huh? So we are starting with the ES. I use the continuous contract because it's Thursday, so I am not switching to the March contract because from now on you can use the continuous contract. And also, like, if you have checked on Wednesday, the volume for the December contract went down and the March volume went up, so you could have switched yesterday already to the March contract. I'm normally switching the day before the roller, which is tomorrow, but volume is already so good in the March contract that I switched directly to the continuous contract, which is the March contract now. So let's start with the after session DR, which I traded personally today. So I had one trade in the IDR session, and I'm going to show you which one. And it was a beautiful setup. So as you can see, like, we opened and directly we get the confirmation. So we're looking for a short trade. And market goes down and down and down, and then we see the retracement. So if you take your Fib tool and you project your standard deviations for the ADR session, yeah, you will see that the retracement exactly goes up to the 0.5 standard deviation level. On top of it, we have a fair value gap over here. So that's already good. And on top of it, we have a double volume imbalance below price, exactly here. So the double volume imbalance is telling us that, that the price is most likely going to want to revisit this area, and we will see then when we will go through the trade that it was a very important level for the market and could have been used for a second entry also. So, but let's stay here for a second. So it's not only a fair value gap, it's not only the 0.5 standard deviation level, it's also in premium. So if you take a normal Fibonacci and you take it over here, so we will see that, first of all, the fair value gap and the 0.5 standard deviation is inside of premium from this down leg. And you have so much confirmations on top of that. So that would be the first trade which you really can look into it. So if you don't take it here directly, so we could switch down into the lower time frame. We don't even have to switch down in the lower time frame because here you have your next fair value gap. It's a very small one. And when we will switch down into the 1 minute, it will be even clearer. So let's have a look into the 1 minute chart, how it's looking there. So here you can see like clear the rejection from the 0.5 standard deviation level inside of the fair value gap. Then we have the down move here, return into this small fair value gap in the 1 minute chart, and then we continue to go down. And like what is very interesting, even if you're looking at the 1 minute charts, you should really, in the beginning, when you start with the concept, you should really look at the standard deviation levels of each DR session. So for the whole day, we use the RDR, IDR to project our target matrix. But like you can, in the beginning, you should really use the standard deviation in each single DR session. And just to watch and see how the algo is driving from level to level. It gives you so much information and you will get such a good feeling for what price is doing and how the algo is driving price. So as you can see, like when we're going down now in the 1 minute chart, you see really how the algo is checking. Okay, we are reaching the standard deviation level. Let's see if we can get some volume into here. And obviously not, we're getting rejected, we're trying again. And again, algo sees there is no sense to change the gear right now. So it's driving down lower to the next. I mean, even the precision, it's just mind-blowing. I mean, look at this. It's like we are working with something. I gave you something which is working most of the time, like 90% of the time, you will see a precision to the tick level. And sometimes, yeah, okay, we have 1 tick difference here, but like the precision is crazy. Same here. We go down to the next standard deviation level. Again, algo checks, okay, should I shift gear? Yes or no? No. Okay, we are going down to the next level. We're driving now into the imbalance, double volume imbalance over here from the 5 minute chart. Let's have a look. Which is going also synchrone with the 1 minute chart. You can see we have the same what we have seen in the 5 minute chart, the same we have here in the 1 minute chart. And then even you could look further, we have another one here, and so on and so forth. So once we reach this volume imbalance, look how price is reacting. So first time we reach it, direct rejection, we are going back to the next standard deviation level, macro, and the algo is checking again. Okay, which direction should I change, or we gonna just continue to drive lower? And as you can see, price is telling you that it's not able to drive higher. So the algo has no interest to go higher at this moment. We drive down and we are rejecting again, exactly to the tick from the double volume imbalance. Going up again, trying it again, getting rejected again. So now algo is happy. We have 1, 2, 3, 4, 5. No, 1, 2, 3 body closes, 4 body closes inside the volume imbalance. And maybe like if you don't check my Twitter frequently, so for me as a rule of thumb, I'm saying that like 3 body closes inside of a volume imbalance, that's for me like the rule of thumb. Sometimes it's just 1 close, but most of the time when you see like 3 closes inside of a volume imbalance, then you can consider it as done or not so important anymore. In general, I already said this many times, volume imbalances are magnets for the algo to drive to. It's a very, no matter in which time frame you see them, or if it's the daily, the weekly, the 5 minute, the 1 minute charts, they have a lot of impact on how the algo is going from price to price. So we finished this volume imbalance, we repainted, ICT would say we repainting it, and then we're gonna continue to go lower. And again, you see the same. Every time around the standard deviation levels, you see reaction from price. We're going down, we're getting rejected, we're going down, we're getting rejected again from the top and to the tick. We are not talking like the only difference or the only deviation we see what price is giving you that it's like one tick. It's crazy when you think about it. And market goes down. And again, you can the whole movement today in the ADR session, you could watch this live happen. So what we see right now is just a candle, but like seeing it when the price is developing live, it's a different story because you see directly how price is rejected and how price goes up once we reach these levels. And we go down and again, next level to the tick. We go down again, we are getting rejected again, we are getting rejected again. All the levels, and here my standard deviation is stopping because I have it to 0.6. But like even here, you can see how price is reacting. So then we see a little retracement, we are going up, getting first rejected from the standard deviation level here, going up. And then the next, the ODR session starts and we are starting to look at this. But even here, you can already, if you combine your knowledge for like, you can like, when you're a beginner, you should start looking at the sessions as each session is an individual price object in the daily sessions. But once you understand how DR IDR works, then you can start combining everything together. So you cannot see it, but here, for example, the overlap from ADR into the ODR is, it already gives you away what price wants to do. So we are already in a where we see like price is not strong enough and the macro has no interest to go up. So everything we are seeing are small retracements. So when you see this and the ODR is already developing, you don't have to take this trade. I mean, you can take this trade, but you don't have to. But you can already see that price wants to go lower. And that's a very important giveaway for you to understand that price will continue to drive lower. So I don't know if you watched the video, my second video where I'm telling about the difference between the open close in the DR session. So you can see here I have this green line, which is the open line, which you can also have in the script, which I shared with you. So open literally from a DR session is the opening price at 9:30 or 3 o'clock in this case, and where we are closing. The closing price, we can let this come up for a second. So the closing price is here, yeah? So the difference between those also gives you an indication what the market wants to do next. And like we already implemented it in the 1.3 version. So if you go on show, like you have them in 1.3, show DR IDR box, and then you can go here on colors. And like what is this doing? It gives you an early idea what price wants to do. So it's very simple when the color is red. Like the open close comparison shows you that we want to go lower. That's an early idea to understand what price wants to do next. So if we, for example, this one, so here we have an open here and we have a close here. So of course that gives you a green box. But if we go through more examples, you will see that this is not quite precise. And you can just simply turn this on with one click, even in the 1.3 version of the script. I'm working on that. We are like implementing a better formula. That's also why we, in this version of the script, we are collecting all the data from the last sessions. Because like I have a formula which is way preciser than just a simple open close. But we are working on implementing everything for the version 2 of the script, which gives you much more insight later on. But for now, just to understand that also the open and the close price can have a relation, which I'm already talked about in my part 2 video of the DR IDR. Then you can also have, like, you're getting crumbs and crumbs and crumbs. It's like you're following the crumbs and you can see where price is developing next. So let's switch back to the 5-minute time frame first and look at the ODRs now. Don't need this fib anymore. Remove. So we discussed that. So you could have entered here and you can enter here in a continuation. So we have the same situation here in the 5-minute chart. There's a fair value gap, price tips in, goes into the volume imbalance and then drives up. So ODR session, again, and here is where it's getting interesting. So look at these are the RDR normal standard deviations, these big lines, yeah? And look how precise the ODR session is formed within 2 standard deviation levels of the yesterday's RDR level. And as you can see, we are seeing the price action going down. Again, we are getting a quick confirmation. Early confirmation between the first half an hour after a DR session is closed is considered to be normally very strong. So what I'm saying with that is, or what I mean with this is, when market is really into a trend and we see immediately after the DR session is closed, we see directly confirmation, it's normally a very good sign that the price wants to continue to go lower. It's like a signal of strength that market wants to go lower. Or of course, vice versa, when we would look at the bullish price action. So anyway, we are going and we have the confirmation. So as you can see, we are rejecting first from the 2.5 standard deviation level of the RDR from yesterday. Also, this is clear. I mean, looking at this, you can see that we are getting rejected. So we're going back into retracement. Here, that would be already the first entry. So again, same like in the after session DR, we're having a nice fair value gap here, which is inside premium of this down movement. And we're getting the first entry, like most probably if I would have traded, I would have been already short with this candle because that would be enough for me. We are inside a fair value gap, 50%, we are in premium and we are rejecting clearly, very clearly on the low IDR of the ODR. So anyway, I would have been short here already. So going down, going up, and this is also rejection for me. Just a little bit close above, and then again, rejection from it. But market doesn't want to go lower. So again, we are trying, or price is trying to get over the low IDR level and gets rejected from, again, per tick, exactly to the tick from the -2 standard deviation level of the RDR from yesterday. So not only there is so much in it, not only you have a fair value gap, not only you have the rejection from the IDR low, no, you also see the rejection based on the standard deviation level. And like this is like, that's how you stack probabilities for trades. That's the trades you're looking for. You're not looking for the fancy trades like yesterday where the market is literally or could do literally everything into every direction and you have no control about it. But like this is again a trade with such a high probability to take, and you can use a stop loss which is really so close that it's giving you a risk reward ratio which is just awesome. Like, I mean, I am talking right now on Twitter about 7R per week. But like literally, if I would have taken this trade, I would have simply, or like my stop position, if I would have entered long, short this candle with the rejection, and my stop would have gone 2 ticks above the 2.0. So And my target would have been the next standard deviation, of course, which we have to just take it in. So my target would have been the next standard deviation level. That would be 10R. If you go normal and you say just a new low, that's 5R. You know, like you don't have to go for the next crazy level, but you could have, because that's the logical consequence. So if you want to go sure, you do the same what we did in the ADR. So you take your fib. So you take your fib, you take the standard deviations for the ODR, and this would be your target. So 0.5 already reached the next standard deviation level when we want to create a new high, a new low. So in that case, your target would be here, and you would close the trade there, and it's 5.9R. So it's just so much confirmation for this kind of trades when we see such a nice price action, which we have seen over the past 5-6 days. Even with all the high impact news what we had, it's just awesome. It's just, price is really beautiful these days. So why would be my stop loss will be there? Very simple. So first of all, it's similar to what I explained in my last live stream. So I see the price action coming from here. So this is clearly a strong bearish price action, right? Can you agree with that? It's very obvious, right, where we are coming from. So when we come down here and we already close below the DR of the ODR, it means for me, I don't want price to retrace. I mean, anytime price could retrace, instead of rejection from here, price could go up and maybe go into this fair value gap. That's always a possibility you have to factor in. But when I take a trade, I just simply say or see rejection, 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 rejection. So for me, if price would go above here, yes, it simply would mean that my view of the market would tell me that we will see a higher retracement. Either we are going up to the 0.5 level and then continue to go lower, or even we would go higher, make a structure break here, go higher, and maybe reject in from here or lower. But when I take a trade, I want to take trades which are making the most sense in my head. So if I take a trade down here, for me, what I expect, I'm taking this trade with the idea that the price will not retrace anymore. So I have levels which are so strong here with standard deviation level plus ODR, plus IDR, plus DR, plus a fair value gap. So when I take those trades, it's just like, okay, the scenario, if my understanding of price action is correct, yes, then price should not go higher. We should not reach higher, because for me, in my world, it would mean that I have to expect an even higher retracement. But even if you take this trade and you say you take the boring stop loss and you put it above the 50% DR, we are still talking about a trade opportunity which gives you 2.84. And even if you're very boring and you put it over here, you still have 1.5. But for me, when I take, I personally, I put my stop here. If I get stopped out with such a trade, I just, that's normal for me. It's okay for me, because I know that if I take the trade, if I would take it and I lose one risk unit, I know, okay, I'm not going to take an entry here. I'm not going to take an entry here. I'm waiting for the retracement and then look if I can find another short setup. So losing 1 hour is completely fine for me, because if my setup becomes true in this case, I know I'm gonna make 5, 6, 7, whatever are. So it's absolutely fine for me, and that's all about trading. You have to understand that there is no guarantee. Sometimes when I'm going over Twitter and I see people talking about setups, it's so many times people are afraid, and there is nothing really in trading which can take this away from you. So you analyze the market, you have your model, you have DR, IDR, and ICT, whatever you're using. Once you see the setup, you go in. There is no hesitation. There is nothing guaranteed in trading. You have to think like the bank in the casino. When you play roulette, the casino has a probability of 51.7% into their favor. And they're letting people play every day until they don't want to play anymore. And nobody there is ever worried about a customer winning in roulette, right? And that's just because they know the statistic is on their side. So if you backtest and you see this setup, you will figure out, yes, maybe you're getting stopped out 5 times in such a trade. But it doesn't matter, because if price is going up here and then is to the next setup, okay, fine, because the next trade then is again a super high probability trade. Because why? Because we have confirmation to the low side. Here you see the statistics, yeah? And these statistics, what you see here on my screen, they are not related. They are not related to high impact news days. So that's all. So in reality, these numbers would be even higher if you take out the high impact news days. So whenever price comes up here, that's for me, that's like where I'm saying, okay, this is a no-brainer trade for me. So because I know exactly that closing above this line has a probability lower than 20%. So if I take this trade 100 days, I know 80 days of these days I'm gonna have a winning trade, and I'm gonna lose on 20 days. So if I'm getting stopped out here, I'm very happy about getting stopped out, because then I just wait for market to retrace into this area, and then my trade would be looking the same. I would enter wherever, let's say here, I put my stop loss here, and then my next target is the next standard deviation. And even if I lose 1 hour here, I don't really care, because I know I'm gonna get a higher probability setup if the market is coming higher. Does that make sense to you? Like for me, when I'm talking about this, it's just so super logic that sometimes I'm like, I'm not sure. Do you understand what I mean with that? If I'm getting stopped out here, I know my next trade will have even a higher probability than this one. So you don't have to be worried when you take this trade and you're getting stopped out. Build yourself a model. My model is, when I'm trading a DR session, I'm not losing more than 2 hours. So that means during this whole session here, I'm gonna take most probably 2 trades. If both of them are not working out, I'm -2, and that's it for me. Session is over. So if you keep this in your mind and you say, okay, maybe I'm unlucky and we have one of these 20 days where it's going to the upside then. Okay, then you take -2R, but just look at when you just need to know 80 days out of 100 days, these trades will make you profit. And that's what you see now every day on Twitter. It's not luck. It's not luck, it's just statistic. If you keep on working on a solid fundament, your mindset is okay, and you're just applying DR and IDR, simple logic, you are doomed to make profit. It's impossible to fuck this up. It's impossible. under the circumstances that you are not like having your mindset, which is just counterproductive for trading. But if your mindset is right and you just follow these simple things, you can't lose. Over the statistical long period, it's impossible. Because it's just, the numbers are not from me, I didn't create them. The numbers are just reality. So nothing is gonna change that, right? So was that clear why my stop loss is here? Okay, then we can continue. Okay. So again, this would have been the setup, that would have been the trade. And now we are looking again what is happening during the regulation where we're in right now. So again, we have the same scenario here. We see a close above the 2.5 standard deviation from the RDR. And immediately, like I like really, this is something I really like a lot. When you draw the line here, that's something I'm really taking care of, is when I see a quick close above a standard deviation level or an IDR level or an IDR level. And immediately with the next candle in the 5 minute, we see the rejection, and this candle is, I think other people say engulfing, but like for me, just this candle completely takes over the candle before, but I think the right term is engulfing. This is a very good sign that the market really doesn't want to go higher. So that's like the fake, they're taking out the level, maybe the thinking that there are some stops, and then immediately the rejection with the candle, which is bigger than the previous candle. So there would be like, if you combine everything together, also if you watch my part 3 video, like what we are seeing here, we're seeing clearly and downside expansion mode. It's like can't be clearer like today. So again, we are turning on the colors. See the same like we have seen before. So I mean, you don't even need the colors. You don't need to look at the open close price. You just look at this, how the ranges are working together from ADR to ODR into the RR, and you have a very good understanding about what price will do. So as an advanced trader, seeing this setup here with the rejection from here back to here, that's already the next point where you can say, I'm gonna go short. Because it's so obvious, again, if you're advanced, you can take a shot here. But even if you're not, it doesn't matter, you wait just simply as a basic beginner, you simply wait until the RDR is ready. And again, the third time of the day, we are getting the setup presented here, like almost picture perfect. Today, it's just everything is perfect. That's not going to happen every day, guys. I mean, it's happening often, but like a day like today is just beautiful. But I think I said it already last time when I was streaming, because it was beautiful there. But like, don't expect every day to be picture perfect. Just have your mindset also ready to say, okay, I'm going to lose a trade. I'm going to lose maybe 2 trades, maybe 3 trades. Doesn't matter. Yeah. It's going to stay the same. So again, we are opening, we're getting, again, what I said before, direct close within the first half hour of the day. We are directly closing below. We are retracing down, but we are reaching not the 0.5. 0.5 is this line. So what we know out of statistics again, we know 0.5 standard deviation after confirmation is always, it's almost the safest targets you can ever pick. So what we see, price going down, but doesn't reach the 0.5 standard deviation. So what would be our thought? We are coming from, again, short trend price action, and price doesn't reach the 0.5. So our idea when we look at this would be very simple. Okay, we want to see at least 0.5 reach before we expect a bigger retracement. So we are waiting what the market is showing us. And again, we are going down, we are going up, and we see one rejection, two rejections. So I don't know how to tell you, but like these levels are so important. Like literally every time price comes into these areas, you should keep your eyes peeled for an entry. Yeah. Maybe for you, it's not for me, where I would say this would be direct entry for me. Maybe you have to switch down into a lower time frame. It doesn't matter. But looking at it and understanding what it means, that's the most important part when you study price action, when you look at the daily price action. So for me, just this setup would be an entry where I say, okay, I'm gonna risk 1 hour for this trade. I don't want, whenever we go above this line, I know that I have to expect more retracement to the upside. That's a simple rule which you can make. Like the market can only do two things at this point. Either it's continuing with what we have seen during the whole session, which is like a strong downward expansion, or it's going to go into a range mode for this session, or it's going to go into a retracement. So both, we don't want to necessarily trade the range, and we don't necessarily want to go into retracement because we are looking for a short, right? So whenever we go above this and we close above that, we know already that we can expect maybe higher retracements. And that's the next step. It's giving you step-by-step guidance about what to look for the price. So would we close above here? Then I would look into, next time I would look for anything, I would be around this area, right? And if we close above this area, then we are coming into the area where we talk about retirement setup. And that's again, that's a no-brainer trade for me to take. But also if you include ICT, I mean, at the end of the day, again, we're having this downward leg. Put strips there. So also here we can see that this leg premium is exactly lining up with the low IDR. Again, so I'm pretty sure if we will look down into the 1-minute chart, we will find even a fair value gap there. But even without 5-minute charts, no fair value gap here. Again, go scenario by scenario. So let's check the 1-minute chart for this one. So here it's even getting clearer in the 1-minute chart. So we don't have a fair value gap here, but same applies for what I said. So we are in discount, in premium, and we're getting directly rejected in the 1-minute chart to the tick again. I mean, you know, somebody has to think that something is happening there, right? I mean, just look to the left. So here rejection, immediate displacement, and then you can look for your entries wherever you want to. Like if you want to wait, you can take the entry here. You can take the entry with the structural break over here. Because that's the difference. Like if you're using DR IDR, you don't necessarily have to have a fair value gap. because your bias is already set. DR tells you you're looking for a short trade. So that's not like if you trade only ICT, you don't have this luxury. You have to follow your own bias and your higher time frame directional bias. But with the DR, you have the advantage that you have the statistic on your side and you know into which direction. So in this case, you don't need to wait for price come back here. Because again, what I said before, or even up here, but also what I said before, it's not necessary, because if we see a rejection here, we don't want price to go over this anymore. Once price closes over here, we know that we have to expect higher retracements. So you can take a structure break as an entry point, or you just wait here. Technically, what we have seen in the 1 minute chart, it would be, I'm sorry when I'm saying something wrong, but for me, like that's kind of the YouTube model. So we have a structure break, we have a fair value gap inside the leg, which is breaking structure. We have a return into the fair value gap. And from there, we're getting beautiful rejected. So 50% entry on this model, stop would be below here, and target would be either here or standard deviation level 0.5. So even the late entry, even the late entry gives you 5R. You don't have to be super intelligent, super smart to take such a trade. Yeah, this, from all the 3 setups I have seen here, is this one the easiest and the safest, let's call it like that. If you take the trade like I would most probably take it, it would be entry direct with the rejection, stop around here, target standard deviation, and you could have 13R. And I mean, even if you say, okay, I'm a little bit scared, I'm selling here, like the most important part is to understand that these levels are like barriers. It's like, it's giving everything away you need to know about price. If we stay below, market will continue to expand to the downside. If we go above, we have to look if there is a chance that market wants to retrace higher. And like I said, not every trade is working out, but it's so beautiful. Like on days like this, these are days where you can technically, if you're a hardcore trader and you would really follow everything I'm teaching you, you can go home with 30R, and this is not really a problem. You could go home on a day like that with 0 losing trades if you do it the way I just explained it. And I know for some people that sounds absolutely crazy what I'm saying, but this is reality. This is what you can do. This is what you can achieve. And we're talking about 7R per week. And just today would be like 3 weeks of target you could have easily. I mean, it's just even me, there were like when 5-6 years ago, I would ride such a day like till I can't anymore. I would take the max out of such a day. These days, I'm taking 1 trade and I'm happy because I'm already quite up this week. Like this week for me, I'm 23R plus. And that's just literally 3 days because I was not trading on Tuesday. And I just took 1 trade yesterday after FOMC. So it's possible. And it's not what I am doing, but it's like I want you to understand and follow the logic why to take a trade and why to take a stop loss, which is in this area. And that's the point you have to understand. There will be days where there's a wick coming, stopping you out. Fine. Okay. You re-enter the trade if necessary, and you will still ending up in profit. And if not, it's okay. Losing is something you have to embrace and you have to go with it. And there is nothing to be feared. there's really nothing to be feared. Like if you can't handle losing trades, you really have to go back to way more basic stuff than trading concepts. Because there is no way, even for me, I take losing trades. I sometimes have 2, 3, 4 losing trades in a row. It doesn't matter to me because I just simply know my system, my model, how I take trades. It doesn't matter because I know I have the statistics on my side. And that's really, again, I want to hammer it into your head. These numbers, which I already which I have shown inside the part 3 videos, they don't lie. That's in total 12 years of statistical data for the ES. And when there is 48% probability, you can't do anything wrong. The only thing you do is simply what I gave to you. The only thing you have to figure out, and that's the only challenge you have right now. The only thing you have to figure out is how to trade inside the zone. Because like this is the zone where everything can happen. Yeah? And that's all you have to figure out. Everything else is laid out for you like it's spoon-fed. So the only thing you really have to figure out how to enter and when to enter inside the DR sessions. That's all. And that's not a challenge, I tell you. It's really not. It's just studying and seeing how prices reaction, even if you don't use ICT, what I would never suggest you. So I think there is not a better combination of DR IDR with ICT. But even if you don't use it, just based on these levels, you can find day after day after day after day consistent profit, right? Because that's all you have to master. I gave you this. Now just have to understand when to enter a trade and where to put your stop. If you are a very beginner trader, you can simply do it like this. At any point, you just enter here and you put your stop loss over here. This trade has the session 84.85 probability to not get stopped out. I'm saying it again, 84% probability to not get stopped out. If you take 100 days, you take this trade, on 48 days you will have a winning trade. So that's what I mean, that all you have to figure out, I gave you where price will not go. I gave you direction where price is most likely to go. And the only thing you need to figure out is when to enter inside the zone or at the levels. And that's really not complicated. A day like that is just showing that. And I mean, it's not only that I'm showing it here, like everybody's saying, yeah, yes, but I mean, let's have a quick look at other markets. Euro, US, the same setup, coming down, rejecting from here, confirmation here, rejection, same setup. So confirmation here, we are going back, there is a fair value gap. Getting rejected here, you wait, if you don't want to take this one, I wouldn't take this trade because, again, what I explained, I want to see reaction on levels. So even if there is a fair value gap, I would not enter here. Where I would enter in this case, down, we are closing below, and here we have our rejection. So my trade, in this case, would be entering here, stop below this, target 0.5, and that would be my trade if I want to take it, without looking at a 1-minute chart, without looking at anything. So here, Euro US dollar a little bit tricky with this up move, with the news. But that's also something. The news, high impact news I gave you, they are only for equity. So if you're trading Forex, you have to understand which news are more important for Forex. Like today's news was no impact on equity in my view. But on dollar, it has a way higher impact as it has equity. That's also why you see this way more reaction than we have seen in the equity markets. But even though looking at this one, this is just like straight continuation. It's hard to get into here except you're really trading a breakout and you find a 1 minute entry on the downward continuation. Here you shouldn't trade because it's the impact of the news. And here the normal regular session I just explained. GPP, same structure. IDR complicated, not complicated, but like you have to know when you enter directly and that we will get no retracement. I think that's very advanced. So I would say normally you just don't trade here because it's just going down. This one you can take this trade, which leads into this one. You're most probably gonna hold over the session because there is no reason. Like if you enter here, if you enter this one, you take this as a rejection, you put your stop over here. That's a little bit unrealistic to enter here. Let's say you entered here. Next standard deviation would be also 5. So there is no reason when you entered here based on the rejection we see from here to sell the trade just because the ODR is stopping. So you put your stop on entry and you just let it run till your target is hit. Your target in this case could be here, just a new low, standard deviation level here, and so on and so forth. So that's all up to you. So then we have the ODR session in British pound today. So market goes up here, fair value gap. Fair value gap around the 50% midpoint. We see one reaction, we see two reaction, rejection from here, from the fair value gap and the 50% line. Market goes down, comes again. Again, you see the reaction. That's the point where you want to enter. Target, new low. That's it. Another trade. Another trade. Stop would be here. Target, new low. Another 6R. Possible. I didn't take, like, not that people are saying, yeah, you don't take this trade. Yeah, I don't trade Forex at all, but I'm here to show you how you can look at this. And then we, of course, we have the session here, IDR session. Don't see a trade here, actually. I'm not sure, like, that could be one. Fair value gap here, standard deviation level, but me personally, I don't see anything for me here. I would have most probably think about this one. So going into the IDR session, and that's advanced again, how to combine ODR, IDR, and RDR together. But like, you see this rejection from the 50% level. 1, 2, 3, 4, done. And rejection from here. So that could be another potential setup I see. In the later day, I would not take a trade here. Let's look at gold. Gold looks boring. Boring, easy. So yeah, I don't have to explain that. I mean, same setup. Here you could work better with the standard deviation levels. Generally gold is an instrument which tends to go very often, just breaks out and continues then into breakout direction. So this is a perfect example of why I would not take a short here, because you see we have no clear rejections here, right? Everyone can see that. So we are bouncing, we're going down, we're bouncing back, we're going down, we're bouncing back, we bounce, 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 go down, bounce again. You see that? For me, I don't see an entry here. Makes sense? Okay. It's all very straightforward here. So here, that's an example for a losing trade. So if you trade DXY and you would have traded the ODR session, so of course you would look for a long. And for me, example, I most probably would have taken a long here. Maybe definitely here. And this would be I would be just stopped out. That's one day where I would take a loss in this trade, because here I would definitely enter for a long. If I would trade it, I'm not thinking about it. I don't need any rejection. I don't need anything. I enter this trade. I would enter this trade. And I would have my stop here, 2 ticks below. My target would be here. So trade doesn't work out, I would get stopped out. Simple as it is. Happens. So, okay. Let's check what last hour, what's happening here. So because people were asking about the tick, so when we're in the regular session between 9:30 and 4 p.m., I love to use tick. So people who don't know it, like that's showing you in New York Stock Exchange how many stocks are in a downtick, so ticking to the downside, and the opposite side is to the upside. So when you see these numbers 1,000, it means at this point 1,000 shares traded on New York Stock Exchange were doing an uptick, and the opposite side 1,000 stocks inside the New York Stock Exchange were ticking to the downside. So and generally you can use that. That's why the two levels are here. Whenever like we see the upper level, which is below or above 800 ticks, it means you can accept, like you can see a reaction. So it's lining very good up with the R levels. So if you look at the SPX, you see clearly here's the rejection from the IDR and the DR low. It's going with a strong uptick, so it means like you get a double confirmation. So I like to look at this quite a lot. But you have to understand, on a trending day, the ticks can stay below 50% the whole day and it's going down. And it's not going to help you on a trending day to look at the extremes, because it's not gonna mean the price will move up. But together, I like that a lot. In that stop DXY long example, would you have move stop BE? No, I don't think so. Let me check. I guess I would be just blindly stopped out. Yeah. I normally move my stop into break even when I'm plus 1 hour with a trade. So I don't think that would have been the case here. Oh yeah, could be. You're right. So normally my rule for my trades, when I'm 1 plus R in a trade, I normally move the stop to break even, except when I'm looking at Twitter and I forget about it. But yeah, in this case, there is a good chance, or there's not a good chance, I would have had my stop on break even. True. But even not, it doesn't matter like break even or not. I this trade gets stopped out. I happily every day. I'm very happy because I mean we're talking statistics. Out of 100 days, I have 1 day already off from the statistics. So that means just the next days and the next sessions, I have a higher statistic on my side. So even if I don't put my stop on BE here, I'm very happy with taking a minus there. Yeah, tick, no, it's not a chart, it's a symbol, it's called tick on TradingView. This, I can share the script with you on, that's not, I can share the script for you. That it's a very simple script I just made for myself because I wanted to have it as an indicator below price. Normally, if you look at tick, it looks like that. So it's in symbol. Do we have an ODR here? So I shared it with you. I just have to see. I most probably put it just as a text file into Discord so you can have it. Yes, normally on other softwares it's just a dollar tick. There's also Tiki, which is for only for the Dow Jones, for example. But I like to look at the tick because I'm trading the ES. So okay, so far so good. Questions? Anything which is not logical, which you're saying like, yeah, that makes absolutely no sense. Any questions? I will put it on Discord. Can you check Bitcoin? Yeah, but like, you know, the point is like, if you look, I will update the indicator, but you know, like there's a lot of things you guys don't see. So if I look at current version, what we are sitting at 1.3 has like 196 lines of code. So the version which which you are using, and the current version we are working on has almost 1,000 lines of code, and we are not like there's a lot of things I want to implement, and we're gonna work on this, test it, and once everything is implemented like I want to implement it, we're gonna share that. So until that, you're gonna have to work with 1.3, which is fine. Yeah, just like there are a lot of things here which you don't need to have. It's just nice to see, but it doesn't make a difference for your trading. We are collecting this data for something else, which will be part of the script later on. But that's why we have the data here, and that's why we are collecting them. Okay, so Bitcoin. What was the question for Bitcoin? Just scroll down. No, I'm not checking correlations. It's a very important point that when I'm looking at ES, when I'm trading a session in ES, I am focused on this one. I don't care what the YM is doing. I don't care what the NQ is doing. Once we reach, like for example, once we reach this level here, important levels on the higher time frame, PD areas, then I look at all three of them, and then I'm looking for an SMT. When we are talking just about 5-minute intraday, I couldn't care less what YM is doing. I had so many days where I could, like I was long in ES and NQ was a super short. And I made a lot of money with my long. That's happening. So SMT can be helpful. Me personally, I don't use it. So how much time did it take for me to become profitable? Well, I had a big advantage that I started trading with options and I lost all my account, but I was very young. And then I started to work in a bank. And from that point on, I was only working in professional environment. So I never faced this problem of being not profitable or going through rough patches because it was all so controlled. And luckily, the mindset and the knowledge you're getting when you are working in this area are just setting you up for success. So I never experienced this time because like just simply because I was so lucky that I have knowledge nobody else has. So generally you can get a glimpse of what that means when you're looking at the DR, and that's like one thing. I could explain every single detail about a volume imbalance, about a fair value gap, and other things, why they are working, why and what the algo is doing there. But that's just knowledge which is normally not accessible to anyone. So I'm just lucky in this area because I just simply know it. So that prevented me from making mistakes, doing like bad setups. I never had this, luckily. Except in the beginning when I was 18, I blew up 30,000, but that has nothing to do with trading. That was more gambling what I did there. Okay, there was a question about Bitcoin. What was the question with Bitcoin? No, I don't smoke cigars, but no, like for me, I don't know. Like there is a point once you master all of that, and once you trade for a long time, that you are having more fun about getting like the perfect entry into a trade. You're not. It's getting boring. So what makes me smile are entries where I really see my entry line and I see price respecting my entry. That's what makes me smile. So no, I'm not celebrating 20R or 50R. I don't care. I'm at a point where I'm just trading, and no matter what the outcome is, I'm just fine. So yeah, when will we trade together? Let me figure that out. There is a lot of legal stuff to take into consideration because I'm not just an influencer or somebody who's content creating. I was working in the professional area, so I have to report my trades to SEC and everything. So I can't just simply go online and trade in front of you. That would bring me into trouble. If you would get stopped at the IDR low, high, would you look for setups? I would look. Okay, the question was if. Wait, I have to stop the chat. If you would get stopped out at IDR low or high, would you look for setups at the IDR middle point? So how can I, first of all, how can I get stopped out at the IDR low or high? I think I don't get it. You're saying stopped at IDR low or high. So stopped here or here, and then looking for an entry here. No, that doesn't make sense to me. Because like I'm either entering here with a tight stop, and if price comes all the way up here, I get stopped out. I would not have my stop over here. My stop would be already here. And once price reaches here, I'm going blind short. I don't really care what I see. Like this, that's the retirement setup I'm talking about, which I take anytime I see it. So no, middle point would be not a question in this setup, what you told me. Yeah, of course, there is like one Dedrick is writing, most of your strategy is simple, but it's also mixed with a complicated side that a diaper div is needed. Yeah, exactly. I mean, the basics of DR IDR are very simple. And you can be successful and make successful trades just with the basic simple stuff. But yeah, I mean, if you deep dive into it and if you get more knowledge about price action and you see and you study it, you're just reaching a complete different level. It's literally um, going from a white belt or a blue belt going all the way up to the black belt. So it's not gonna come from alone. You have to train for it, but like the reward is crazy good. No, I'm not hedging anything. Kill zones in DR IDR have nothing to do with each other. I mean, kill zones are so widespread; it's literally covering the whole day. So I'm not looking at kill zones, and I personally also don't respect the lunchtime. So because algos they don't have lunch. Franken. Aus dem schönen Franken. No, I like that's a good question. Do you have a profit in dollar daily goal? No, I don't have. Actually, I'm not working with daily. I'm not even if I said on Twitter, let's make 7R per week, but my goals are all quarterly, half year, and yearly. Why? Because I don't want to get under pressure. Like, let's say I have a week and I'm now 5% plus or 5R plus on Thursday. I don't want to get this into my head that I'm saying, okay, it's Thursday, tomorrow the week is over. I have to find 2 hours somewhere in the market because days it's just like what it is. Some days I don't see trades. I don't see trades. I want to trade. So when I work with a weekly goal, it's just putting pressure, or like even a daily goal is even worse. So if you're working with low time goals, you always put yourself under pressure. And in reality, trading is an average game. So you have weeks like the week I have right now, 23 plus, and I have weeks where I may be ending up with 2 or 3. But overall, the average which is counts. So that's why my goals are always quarterly. So my goal is quarterly at least 60R, and I will go from there. And then I'm building this up for half a year. So even if I don't reach my quarterly goal, I'm not going to trade like a maniac in last week before the quarter is over, because it's all trading is a long time term. It's not one day, it's not 1 week, it's 1 month. You should look at your stuff at a 12-month rolling period. That's it. What percentage of the time do you think the retirement presents itself? I would say it's rare. I mean, like the real retirement setup where the price is retracing really back to the IDR levels, it's pretty rare. So we don't have one here. You see, like I'm already back 1 week. There was no real retirement setup. Yeah, I would say it's very rare that the real one. Like here we have one. That's like the perfect retirement setup here. So you get confirmation long, price retraces back to the DR, IDR low. Like that's the real setup. Of course, you can take entries here, but like when the real retirement setup is retracing really back to the IDR low. So the lower it comes, the better it is. You take an entry here. The lower it comes, the better it is. So take your stop here and your target is a new high. Oops. So that was one, and that's from 2nd of December. That was the first one I was seeing now. So that's like 14 days. One I have seen. I mean, you don't need them often. They're like other instruments. You can scan the instruments for this setup because it's really one of the best setups and very easy to work with. So, in my opinion, today it was USD, like everything related to Forex today. The news was important because it was job claims, which are much more important for currencies than they are for equity. But that's things you have to study by yourself because like I'm not a Forex trader. I look at them, but I'm not trading them. So I can tell you macroeconomic why initial claims have more impact on a currency than they have on the equity market. But Investopia is also explaining that to you. Are you into DeFi platforms? No, not really. Okay, I guess that's it for today, guys. I thank you very much. I hope you enjoyed the stream. You had some insights. It helped you a little bit. Um, that was the first time I tried live stream. Let me know if we should continue this from time to time. I will not stream every day. I'm gonna look definitely how to make it happen that we can get some live trading in January. Um, yeah. Okay. Yeah, you can rewatch it. It will be on my YouTube channel. The video will be directly posted, so you don't have to record or see anything. Okay, day is almost over. Give me a last time. 7 if you made profit with DR today. Amazing, guys. Okay, have a good one. Thank you. Bye bye.